Well, hello everyone, and welcome to the Friday edition of your Daily Five for June 19, 2020. I'm Joe Duarte, founder of Joe Duarte and the MoneyOptions.com. And as usual, I'd like to thank you all for giving me the next 10 minutes of your valuable time. Today, I want to talk to you about the markets which remain at the edge of chaos. I want to focus on summer stocks that are on my radar screen. We're now in the early days of what Wall Street calls the summer doldrums, that period from Memorial Day to Labor Day, when trading slows down as traders go on vacation. This year is not like a normal year due to COVID-19. So with the economy being difficult to assess, with consumers perhaps minding their wallets, it could be a summer that is not as other summers have been, where it's slow. In fact, it could be either very bumpy or the market could actually surprise us and deliver a big breakout. All kinds of things are possible. So we want to make sure that we are able to trade with whatever the market is giving us. So here's my sound trading principles that I discussed the last time. We want to stay with that primary trend. Right now, that primary trend is up, as I will show you in a minute. We don't want to fight the Federal Reserve. Federal Reserve has kind of changed things up a little bit, but they're still in easing mode. We want to keep those position sizes small. If you're a big trader and you're used to trading 500, 800, 1,000 shares, you might want to cut that back some because it's going to cut down your portfolio volatility. You want to take those profits where warranted. And so I had some questions about that from my last show, and here's what I mean by that. If you have a stock that's up 20% and you have, let's say, 200 shares, you might want to take 100 shares off. Just get some of that profit in your pocket. You always want to keep looking for those new stocks with those excellent charts and where those management people are doing all the right things. You want to manage your sell stops. You want to keep those losses anywhere from 5 to 8%. If the stock bounces back, you can always get back into it. You can always prepare for when the music stops. What that means is that you should keep it in the back of your mind. The market can do anything it wants because it's run by algorithms, and they can change your mind with every single headline. So that said, let's look at the Fed a little bit. Are they running out of weapons? I mean, in the middle of March, they were running $300 billion per day in money into the Treasury market. And that's why the market took off. Over the last couple of 3 weeks, they've cut it down to $4 billion. So it's $4 billion of Treasury purchases by the Fed enough? Well, we're going to find out. So they're buying corporate bonds now instead of treasuries, and I think they're just basically running out of treasuries to buy. But is that going to be enough? Does the market agree with the Fed? And I think that's what's going on with all this volatility that we're seeing. So what's the best approach in what could be a bumpy summer? Well, let's start with my first chart every time, which is the advanced decline line, New York Stock Exchange advanced decline line. Remember, we have the complexity zone where the market is good. That's where the forces of the universe are on your side. That's above the 200-day moving average and above the 50-day moving average, which I call the edge of chaos, which is where everything works right and where stocks get launched. And chaos zone, of course, which is the area where things go badly, it's all disorderly, it's a mess. Where are we now? We're in the complexity zone. The advanced decline line is trying to make a new high. So what happens right here is important. If the advanced decline line fails, again, there's your bumpy ride. What are the rest of the indicators telling us about the trend? Well, market's trying to make up its mind. Look at ROC, which measures momentum of the advanced decline line. It's trying to recover. It's a little bit flat, so a little bit of a cautionary sign. Furthermore, we look at RSI. It's not quite overbought. So at this point, a lot depends on what's going on with the Fed, and a lot depends on whether people stay around to trade. I want to look at some summer stocks. The first one here is Hormel Foods. Okay, so Hormel, why am I talking about Hormel? It's not a sexy stock. It's not a tech stock. Well, it's a meat processing company, and they're best known for Spam. But guess what? They are making big inroads into turkey, and they are making a lot of inroads into the canned chili market. I'll tell you what, I love their Mary's Chili Verde. I mean, this is not a plug for Hormel, but I'm telling you that for a canned chili, that stuff is great. The point here is that if there are meat shortages, as has been forecast, and prices go up, I think Hormel can benefit. And the market's telling us that I'm on the right track. Why is that? All right, let's look at the $49 area here. Okay, Hormel is trying to break above that. That's a significant area. If you look at volume by price, that's a big resistance bar. That means that if Hormel pops above there, we could be off to the races. And what else supports the possibility of a breakout? Look at the accumulation distribution. This thing has been under accumulation since March. Unbalanced volume has turned up. And guess what? ROC, momentum, has just crossed the zero line. And what else is beautiful? This thing has room to go because RSI is not even close to 70. So we could see $51, $52, $55 under the right circumstances. And I just recommended this stock at Joe Duarte and themoneyoptions.com. My second stock for the summer, Monster Beverage. This is, of course, the energy drink company. And like everything else with COVID-19, it took a big hit. People were staying home and all kinds of problems. Sales went down. Guess what? People started buying Monster on Amazon.com and other online outlets. And as the economy tries to recover, the traditional sales areas for Monster, which are convenience stores, are starting to come back. So the stock has started to come back. And again, Monster is an interesting situation because it's trying to make a decision here. I do own this stock, and I did recommend it at Joe Duarte and themoneyoptions.com, but you want to make sure that if you buy it, you're cautious with it and you mind your sell stuff. Accumulation distribution is flat, but on-balance volume is up. ROC just turned up, and it's not near overbought. But again, my tiebreaker indicator, volume by price. Look at this. Huge bars here that are now support, little bars here that are resistance. If the stock breaks out, it could make a big move. And here's what's really important, okay? Look at its competition, Coca-Cola. You know, Coca-Cola is a big soft drink maker, but the stock is dead, and it doesn't look like it's going anywhere anytime soon. So Monster's market share is coming from Coca-Cola and perhaps Dr. Pepper and Pepsi. Look at the accumulation distribution here. This is abysmal. Nobody's buying this stock. Look at the unbalanced volume, trying to bounce back, but just bouncing around the bottom. Momentum is completely neutral, and RSI is actually going up when nobody's buying this stock. That means that if it gets to 49 or 50, it's probably going to get sold because volume by price, look at this huge resistance bar right there. So you want to make a choice on beverages this summer, go to Monster, avoid Coca-Cola. Now, let's look at my final stock here. This is a very interesting stock. It's a company called Medifast. I own the shares. I recommended it at joeduarte.com. They make meals that are shipped to people, and then people are coached by weight loss coaches, okay? And so people are staying home. They're trying to be more health conscious because they don't want to get COVID-19, and they're looking for quick ways to make their life better. So guess what? Here's the inevitable COVID-19 decline, and now it's bounced back. Complexity zone above 200-day moving average. Look at this. 50-day moving average is about to make a golden cross. It gets above that 200-day moving average. That'll probably spur some buying. Here's the most beautiful thing about this, though. Medifast is actually growing its business through this COVID-19 thing. And they're measuring that in a very interesting way. The number of coaches that have joined the company has increased, which means there's more business coming in. So let's just look at the technicals. Advanced accumulation distribution starting to bounce up. I know that's not great, but unbalanced volume. I'm telling you, unbalanced volume usually leads accumulation distribution. That's telling you people are buying this stock. ROC, a little bit weak. Like to see it do better. And it's getting a little bit close to overbought. We got in at about 100, so we're actually doing pretty well. I'm sorry, 110. And so we're still doing pretty well in the stock. So I'm expecting maybe a little bouncing around 115, but if it doesn't break down, the stock should do well. Now, let's review a little bit before we go. We're looking at this market from the point of view of being in an uptrend. We're looking for the Fed to keep an easing mode. They've told us that they're going to be in easing mode. The problem is that they're only putting $4 billion into the Treasury market every day. The third thing to do is to watch for the seasonality of this market in the summer and see what's actually going to happen. Finally, I'd like to tell you that Medifast is going to pay a $1.13 dividend to active shareholders on June 30th, which might make that stock also pop. Thank you all for listening, and for more details on the stocks featured in this presentation and others, consider a free trial to Joe Duarte, themoneyoptions.com. You can always read my articles on my website and StockCharts.com. You can check out my trading options book for the last 2 years running, Trading Options for Dummies, at Amazon.com. Full disclosure, I own shares in Medifast and Monster Beverage. Look forward to our next visit right here at your Daily 5. You can catch me on Dave Keller's The Final Bar on June 25th. We will definitely talk again.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.